Okay, so let's get right into it. Crypto trading has come a long, long way from the simple days of just, buying and holding on for dear life. Today, the real edge isn't just about what you trade, it's about how you see the market itself. We're talking about this incredible fusion of powerful financial tools and deep, transparent data.
Seriously, just think about that for a second. Any price chart can tell you what happened in the past, but what if you could understand why it was happening as it was happening? What if you could see the big players making their moves before it created a massive spike or dip on the chart? Well, that's the huge shift we're going to break down.
But look, to really get where we're going, we first need to appreciate how we got here. The whole journey of a crypto trader has changed. It's changed dramatically in just a few short years.
It all started with that super simple strategy, right? Buy and hold. Then came spot exchanges, which were basically these online marketplaces that made it way easier to get in the game. But the real game changer, the thing that brought in a whole new level of sophistication, was crypto futures. And that leads us right up to today, where the ultimate advantage, the real edge, is all about data-informed trading.
All right, so let's zoom in on that pivotal tool that really changed the whole landscape for traders. Crypto futures. What exactly are they, and what makes them so incredibly powerful? So at its heart, a futures contract is actually pretty simple. It's basically just an agreement, a promise, to buy or sell some crypto at a price you both agree on at some point in the future. Now, the key here is you can speculate on where the price is headed without ever having to actually hold the coins yourself. That alone sidesteps a ton of the usual headaches like wallet security and storage. And that leads us to probably the biggest advantage. You see, with normal spot trading, you only make money if the price goes up. That's it. But futures let you trade in two directions. If you think the price is going to shoot up, you go long. If you expect it to tank, you go short. This unlocks the ability to potentially profit no matter which way the market is moving, bull or bear. Now here's where it gets really potent. Leverage. Leverage basically means you can use a small amount of your own money, let's say $1,000, to control a much, much larger position, like the $10,000 you see here. It can absolutely magnify your potential gains, but, and you've got to hear this part, it also magnifies your potential losses by the exact same amount. It is a classic double-edged sword that you have to respect. So it's easy to see why futures just exploded in popularity, right? They let traders protect or hedge their other investments, speculate with a lot less capital tied up, and cash out their profits without ever having to mess with the actual crypto. It's all about financial efficiency and having more options. But here's the thing, all of that financial power, it comes with a massive blind spot. See, having the tool to place a big bet is one thing, but knowing when and why to place it, that's something else entirely. And this is really the central question, isn't it? If you're using all that leverage based only on what a price chart is telling you, you're missing half the story. You've got all this financial firepower, but you're kind of aiming in the dark, just reacting to what already happened instead of anticipating what's about to happen. And boom, there it is. This is the core idea we're talking about today. Financial leverage multiplies your money, but informational leverage, that multiplies your insight. And let me tell you, the sharpest traders out there know you are not going to make it long-term without both.
So what is this informational leverage? Well, it's the story that's happening out in the open, right there on the blockchain. It's about seeing which wallets, especially the big ones, the so-called whales, are starting to buy up a token, or which ones are quietly starting to sell. It gives you the context, the who and the why that drive the price.
And this is exactly where data intelligence platforms like Aave.ai come into the picture. They act like a command center, pulling in data from over 130 blockchains and hundreds of decentralized exchanges. This lets you do things like track whale movements, check if a smart contract is safe, or see where the big money is flowing, all in real time. It's about getting that crucial context. So, what happens when you combine that deep, on-chain intelligence directly with the raw financial power of derivatives? Well, this is where trading really enters its next phase. A perfect real-world example is Aave.ai integrating with an on-chain perpetuals exchange like EdgeX. Now, real quick, perpetuals are just a type of futures contract that doesn't have an expiration date. When you combine these tools, everything changes. You're no longer looking at data on one screen and then scrambling to place a trade on another. You can literally see the story unfolding on the blockchain and execute a leveraged trade right then and there. This turns reactive gambling into a proactive, data-driven strategy. So, the whole workflow for a modern trader looks totally different. Step 1, you use on-chain data to form a theory, a thesis. For example,
hey, I see a bunch of whales are buying this token. Step 2, you use futures to act on that thesis, amplifying your position with precision. And step 3, which is crucial, you keep watching that on-chain data. It becomes your feedback loop, your early warning system that tells you when the tide might be turning.
The benefits of putting these two things together are just crystal clear. You get speed because everything's in one spot. You get way better security because you're trading from your own wallet, not giving up your assets. And most importantly, you get intelligence. You see the warning signs and the big money moves before you click the trade button, not after.
So let's bring it all home. What is the single most important thing to take away from this? What is the new edge in today's market?
It really boils down to this super simple but powerful idea. Futures are your tool for managing your exposure. You know, how much risk you're taking and in what direction. On-chain data is your tool for managing your context, your understanding of what's actually going on in the market. To be truly effective, you need both halves of the whole. And that's the bottom line right there. For years, the edge was just having access to leverage. But today, pretty much everyone has that. The real sustainable edge, the one that lasts, is having access to better information and knowing how to act on it.
So as we wrap this up, I'll just leave you with this one question to think about. When you look at your own trading strategy, are you really, honestly trading with the full picture? Or is there a massive blind spot you need to fill? Because in this market, what you can't see will absolutely hurt you.